On March 18th, 2025, I made a cryptic tweet predicting that Hycroft would run up just over $3.72, as that price point was a very key level important to the company. Not to investors, to the company. Now, full disclosure of facts here, I made the same prediction in my Discord a week earlier on March 12th when Hycroft was trading around $2.60, letting the folks know, in my opinion, that Hycroft was getting set up to run up to around $3.72. And that is exactly what happened. It went up to $3.68. In retrospect, my math was a little bit off, and I don't know how I made that mistake. It was not $3.72 that the stock needed to run up to. It was only $3.44. But let's start off looking at this chart that we have here on the screen. The ticker in the red and green candles is SILJ, which is a basket of junior mining silver companies. And then overlaid on top of it, I have the gold line chart, which is Hycroft. And we'll notice that back in the early part of 2024, between April and June, Hycroft outperformed the basket of all the other junior miners. And then for the last 12 months, it's underperformed until March, eerily coinciding with that tweet that I put out, how Hycroft all of a sudden went up over, outperforming all of the other junior mining companies. Why did this happen? Was it an accident that in these two key periods, Hycroft outperformed all of the other silver mining stocks? And I want to share with you a little bit of my investigative process and how I use my understanding of companies' motivations and the rule framework of the SEC to try and predict what these companies are going to do, and why I notified my Discord and then everybody else out on social media that I expected a push up on Hycroft stock, which would be a temporary push up. If you want to learn a little bit about those things, stick around for just a minute. I'm going to go through what happened in my opinion in a couple of filings, and I'm going to walk you through what I forecasted and how it played out. The question I'm kind of asking in this video, asking myself, asking you, asking any experts out there is it unusual that Hycroft ran up well above the basket of other junior mining stocks in the early part of 2024 and again here in the early part of 2025? If we redraw this comparison of the basket versus SLV, which is a ticker that tracks the price performance of silver itself, you can see that the basket very much correlated with the price of silver over the last 12 months. Why did Hycroft have the big moves up in May of 2024 and March of 2025? Now, maybe this is all just coincidence, but I have two red lines drawn here on the Hycroft chart, March 19th, 2024 and March 12th, 2025. On each of those dates, shortly after the 10K was filed in each year, Hycroft issued a Prospectus Supplement letting investors know that they were limited in their cash raisability due to the baby shelf rule. In 2024, that supplement let investors know that Hycroft was limited on the amount of money they could raise to $15.3 million. In March of 2025, the Prospectus Amendment let investors know that, again, due to the baby shelf rule, Hycroft would be limited in their cash raisability to $21.2 million. People often confuse those amendments as some announcement about new dilution, and that's not really what they are. They are an amendment to an existing shelf offering. The S3 that Hycroft most recently filed was in May of 2024, and that S3 is good for 3 years. And that S3 hanging out there just lets you know that from time to time, the company might use shares to raise money as needed if they need to boost their liquidity a little bit. But when the public float drops below $75 million, then companies become limited by SEC regulations to what is called the baby shelf rule. I will put a link to this document in the video description because I want you guys to read and understand what the baby shelf rule is. But in a nutshell, it is designed to limit shareholder dilution on small cap companies, and it restricts companies with a public float under $75 million to raising only 1/3 of their float value over a 12-month period. And that is why in March of 2024 and March of 2025, we get these amendments saying, hey, just wanted to let you guys know we are subject to the baby shelf limitation and we cannot sell the full amount of shares under the S3. In March of 2025, they let investors know that they were capped at 1/3 of the public float, or $21.2 million. The way that those baby shelf limitations could be removed, though, would be if Hycroft's price ran up and the value of the public float went up over $75 million, then the company can issue another amendment letting investors know that, hey, the full S3 cash raisability is now open again. And after the run-ups in April, May 2024, and here in late March 2025 of Hycroft's stock, the value of the public float did increase over $75 million. I have those dates highlighted here on the chart with the green vertical lines. After the value of the public float goes back up over $75 million, then the company drops a second Prospectus Supplement. In May of 2024, it was to let investors know, hey, we're no longer subject to the baby shelf limitation anymore. We've got the full $100 million of the S3 available to us. And now here recently, just a couple days ago, the company filed again, hey, we're not subject to that $21 million baby shelf limitation. We got the full S3 available to us, and the amount remaining under that S3 is $97.5 million if we need it. Now, I was very curious here in 2025 if the pattern we saw in 2024 would repeat, where the company gets hamstrung by the baby shelf rule, by the value of the public float being under $75 million. And then we see the price of Hycroft mysteriously go up, completely untethered to the basket of other silver stocks or even the price of silver. Was it just coincidence that Hycroft moved up untethered from the price of silver and magically got over that $75 million value of the public float and then came back down? Was it coincidence that that happened in 2024 and then again in 2025? Was it coincidence that social media caught on fire in these same periods, really pushing the stock price up? Was that coincidence, or was that just people that are invested and they're excited to see the price go up? These are questions that I ask myself. So as an investor, what do you need to think about as you're watching Hycroft over the next year? If this is a stock that you're trading, you need to keep in mind that the company is very closely watching that $75 million value of the public float. And again, the public float is different than the market cap. The market cap that you see on your broker is calculated on 24.98 million shares outstanding, but the public float is calculated on a different number, shares held by non-affiliates or the general public. And that share count is a little bit lower, 21.8 million shares, highlighted in the middle of your screen in yellow. As you guys know, based on my review of the 10K that I posted for you a month or so ago, I believe that Hycroft is entering a period where they have constrained liquidity and they're probably going to need to raise some cash. How they do that, I don't know. We will find out this year. After talking with the folks over at dilutiontracker.com a year ago, and then again this week to make sure I still understood how all of this worked, they confirmed to me again that once the company publishes a prospectus supplement saying that they are in the clear, they went over that hurdle of the $75 million public float, they're in the clear to raise money to whatever extent they want until the next 10K a year from now. And the company does not have to worry about being constrained for the rest of the year by that rule on the baby shelf that would normally limit them to only diluting up to 1/3 of the public float. So when I notified my Discord in early March and put out that cryptic tweet in the middle of March saying that that stock price going up was a key level to the company, this is what I meant. The company needed the public float to increase over $75 million, at least for a day, so that they could issue this Prospectus Supplement, the same thing that happened a year ago. And now they're in the clear to raise however much money they want to, should they need it. Now, was that coincidence both of these times, or was it intentional? That I leave up for public debate. Now, you guys probably know I do not own any position in Hycroft. I don't have any thoughts about whether you should buy, hold, or sell Hycroft. I don't care what you do with your shares. The reason that I think about this stuff and I watch this stuff and I convey these things to you in a video is I want you to think like an executive thinks, not like a retail trader thinks. Understand the motivations of a company. Understand if they have a liquidity need, what might they be most likely to do? I want you guys to think like managers of a company. Think like a CFO. And keep that in mind if you're seeing the price of Hycroft go up, that they're probably going to be incentivized to use that opportunity to sell shares, which will tend to hold the price back, suppress the price. Now, I don't know what's going to happen with gold and silver prices or the economy for the rest of this year, and I don't know what's going to happen with Hycroft, but these are just interesting things for us as investors to consider as we're trying to keep our emotions in check and intelligently trade these highly volatile speculative stocks. I want to know what you guys think about all of the information covered in this video. Do you have any questions? Do you have any other comments you want to add to the conversation? This is just me sharing my tinfoil, my due diligence. It does not mean that I'm going to be correct. And I welcome your guys' thoughts and opinions down below. Thank you for watching all the way through. I am Tony Denaro, and I will see you on the next video.